Next, we'll see the measurement principles of conceptual framework. What does your conceptual framework talks about the measurement? Measurement, it says that you can measure anything at a historical cost or its current value. That we discussed, any asset in the world, either cost or current value. Now, the current value can be an exit value or entry value. That means it can be a fair value which the third party is going to give you, or it can be a value in use which is the present value of the future cash flows, or fulfillment value for the liability. Entry value means current cost. That means if you want to exit this and replace it, it's called a replacement. So you can measure any asset at a fair value or cost, and the fair value can come from different sources. So what are the factors you have to keep in mind while selecting the measurement basis? Should I take cost or should I go with the fair value? On what basis you should choose? It says that the information provided by the measurement basis must be useful to the users, no? So it must be relevant and faithful. So this is what you need to keep in mind. Have they provided you mixed measurement basis? Yes. The conceptual framework confirms the elements of a mixed measurement approach in developing standards. Like for example, they have given you cost model, devaluation model. Somewhere they have gone amortized cost, FVTPL. They have given you choices. They said factory building you can go for cost model, office building you can go for revaluation model. It's called a mixed measurement. Have they permitted it? Yes. Why? For a faithful representation. Now the mixed measurement approach implies that the company selects different measurement bases for its various assets and liabilities rather than using single. It never said everything cost only. No, didn't say. Standards also won't say. Why? Because conceptual framework doesn't say about it. So the measurement basis so selected should reflect the type of the entity and the sector in which it operates and the business model what they have adopted. So what you should do is not to get an accounting effect, you don't do it. Keep in mind the business practices in which you are into, what you are doing. Followed, no? Like I told you that same guest example, like puri bhaji or masala dosa. No, there is one more option. You can bring one North Indian dish, but keep the environment in mind, no? So it should reflect the type of the entity, sector, all those things. So mixed measurement basis is permitted. So let us look one question on this. See, concept is mixed measurement basis. Concept is clear? What they need to choose is like mixed measurement basis means, first of all, how many measurement bases you have got? You have got cost and value, fair value. We will say fair value. Followed, no? In the current value, there is exit value, entry value, replacement cost, value in use, so many things are there. But broadly, we say that any measurement is having only two bases, cost value or fair value. Are you clear? Forget about these things. What is the measurement basis? At any time, how do you measure your assets or liabilities? At cost value or at fair value? One among the two. No, is there any third basis? No. That value will have multiple bases. How do you arrive at it? Now, is it necessary that all the assets of in my balance sheet should be valued at historical cost only? Should it be valued on fair value only? Can I use a mixed measurement? Is it okay that some assets are at FVOCI, some debt instrument at FVTPL? That is mixed measurement, and that depends upon your business model, no? If your business model is held to collect plus SPPI test is passed, you say FVOCI. So when you choose any measurement basis, keep your mind business model also. What is your practices? FIFO, when you talk about, it depends upon your business model. If your business practices are first in, first out, use FIFO as a measurement basis. Are you clear? Now, how this question, how this concept of different measurement basis they may ask you in the exam. They say that the directors of Jayant received the following email from its majority shareholders to directors of Jayant Limited regarding measurement. One of the shareholder is asking one letter, okay, read this. I recently read an article in the financial press about mixed measurement approach. Somebody read it seems in some article that is used by the lots of companies. I hope Jayant Limited also does not follow such an approach because mixed seems to be inconsistent. Because we love consistency. We want everything to be same. Mixed means that means there is a chance that you may manipulate us. I believe that consistency is of paramount importance and I hence feel it would be better to measure everything in a uniform manner. It would be appreciated if you could provide further information at the next AGM on the measurement basis covering what approach is taken by Jayant Limited. Have you taken mixed basis or have you taken single basis? Why? And the potential effect of such approach on the investors trying to analyze the financial statement. Can you help us in now one more work, your work is going to increase now with all these things. And tell me student, and see they are giving message, okay, ICA is telling you a message. This is your real life reflections, these questions. This type of questions you are going to face. So then somebody has to go into the fundamental concepts there, explain, look what is the basis there, how it works, how it operates, why we want to give this information. Anyhow, at an entry level you need not bother, but 10 years down the line, if you are going to become destined to become a CFO, then you should know this in and out. No? Because ultimately this director will, what they will do? What this director will do? Director will hand over this letter to this CFO. Come next AGM, sit there, answer this guy. And the people who are sitting there can be very sharp, like Mohandas Pai, you know, no? Mohandas Pai. Now, he came into Infosys because in Infosys meeting in 1990s, he's a chartered accountant. He's sitting and asking sharp questions like this. Narayan Murthy became very happy and I asked him, would you like to become CFO of our company? 1992 startup, no, at that time, means not startup, not that, they were into public, but not that big. Because they understood what question, what that person is asking, trying to ask. Because these questions reflect your understandings, okay, vision, so many things. So investors are not fooled there. So prepare notes to notes for the directors of Jayant to discuss. That means CFO has to prepare now. The issue raised by the shareholder email with reference to the conceptual framework wherever it is appropriate. From this you understand that this is a conceptual question, conceptual chapter question. Yes, then you talk about the mixed measurement, telling same story, okay. What we have discussed here, same thing you have to fill in this bottle now in the context of one question. So mixed measurement means applying different thing rather than using single one. So that depends upon the sector, business model, etc. So there are criticisms that investor thinks that there could be no relevance because of the inconsistency. However, it is important to note that the figures cannot be derived by one size fit for all approach. Therefore, to state that the mixed measurement approach is inconsistent is a very poor argument. It's not correct. You cannot value everything at a same thing. Now, conceptual framework has permitted mixed measurement approach. So, based on the reaction to the convergence to Ind AS, it feels that the most investors feel approach is consistent with their analysis also. It's very nice. Makes sense, no? Investment, see, you know, once upon a time, your mutual fund investment, how it was valued in your accounting standard? Mutual fund investment was valued at cost or fair value, whichever is low, just like an inventory. But today that cost option is not there only, fair value only. Followed, no? So it's more relevant. So argument against the mixed measurement are far outweighed by the greater relevance. So Ind AS adopts a mixed measurement basis only, which includes your current value and historical value, where Ind AS allows a choice of measurement basis. Directors must apply their judgment. So if they have given some choice of basis, should I take the fair value or this, like PP, revaluation model or this, apply your judgment. For some estimate, high level of measurement and uncertainty may also outweigh the factors such as extent to which information may be little relevance. Okay, you study this, English language only. Are you clear? So next, this conceptual framework talks about the presentation and disclosures. See, first of all, you understand how it is framed. First, it starts with the information to the investors. Then they talk about what all the qualitative aspects of that financial statement. Then they talk about the elements of the financial statement, definition. Then they talk about, should I recognize that financial statement items? If I have to recognize, then what value I should recognize? Then finally, how I should present and disclose. With this, conceptual framework ends. Probably one more item should be there, concept of capital and all. With this, actually, we are done with the first part. Now, effective communication in the financial statement is also supported by following principle, that entity specific information is more useful than the standardized description. When you do the presentation and disclosures, you give more of entity specific information rather than generally industries like that. You tell what you are. Duplication of information in different parts of the statement is usually unnecessarily and make the financial statement less understandable. Don't duplicate it, simply copy paste so much information. Followed, no? You see, somebody can make you more confused by bombarding with so much information. Now, their expectation may be different. Their expectation may be define your priority. You take what you want. Followed, no? But there is a very clear guidelines to the preparers of financial statement. Don't bombard them with information. Give relevant information. And what I have done, my FR concept book is relevant. Followed, no? I have taken what is needed. Then you understand it better because you are not seeing sea of information. You can connect, know what they are trying to tell. I am not telling them, they are telling them for themselves. Classification. Okay, next comes the classification. How should you sort it? The sorting of the assets, liabilities, equity, income should be based on the characteristics. That's why if you see my concept book, first I do one grouping. If you see my Q&As, I do one grouping. If you see the study material question, they say that they do grouping, but there is no grouping as well. Test your knowledge is a mixture. Then what sort I will do? Based on the similarities, characteristics. If those are falling under similar thing, why? Because understanding becomes easier for you. The moment I present it, okay, this is the study material question, this comes examination like this. You appreciate the logic behind how they will ask you in the exam. So the classifying dissimilar items together can obscure the relevant information. Last thing is test your knowledge. Read, solve the problems of test your knowledge. Absolutely no classification there. And comparability also may not provide a faithful representation. So it may sometimes to be appropriate to separate into components of different characteristics to classify, like current, non-current, continued operation, discontinued operation. So the moment you classify it, things becomes very clean and clear to you. It sits in your mind. Can I join together? Yes, obviously. Just like classifying is breaking, you may add together assets and liabilities that have got a similar characteristics and include it in the same classification. So different level of aggregation may be used in different parts. Like for example, balance sheet and statement of profit and loss account gives the summarized information only. In notes to accounts, you give the breakup. Aggregation means rather than giving 4, you club it. Like provision, warranty cost, it's not added in provisions. You give as a separate. Then all other provisions, you add it and say other current assets, other provision, other current liabilities. Are you clear? Now, yes, with this, all the questions on the first part of the conceptual framework will be done. You read how the presentation related question they may ask you. Everest is a listed entity having investment in subsidiaries. Its annual financial statement for 31st March and 31st March 2022 and 23, Everest classified Kanchenjunga Limited as a held for sale and presented it as a discontinued operation. Which standard? 105. So you should call 105. Can you do it? Yes, subsidiary held for sale is a discontinued operation. Now on 1st November 2021, the shareholders authorized management to sell holding of Kanchenjunga within a year. So in the year 2022, 31st March 2002, management made a public announcement also if intention to sell, but did not actively try to sell the subsidiary as it was still operational within the Everest group. Now 105 should say, can you classify it? There are conditions, no? It should be highly probable, you should have actively marketed. Now certain organizational changes were made by the Everest during the year, thereby resulting into additional activities being transferred to Kanchenjunga Limited. Additionally, during the year ending 31st March 2023, there had been a draft agreement and some correspondence with the investment bankers, which showed in principle only Kanchenjunga still was available for sale. So it was sale only, but I didn't market it. But next year also it was into sale, I didn't sell. But my documents show that it's still for sale. I am not actively involved in it. Now discuss whether the classification of Kanchenjunga as held for sale and its presentation as a discontinued operation is appropriate with relevant indices. And evaluate the treatment in the context of conceptual framework. Now you should say classification, aggregation. So concept says that, okay, if it's a discontinued operation, you show it separately, because let the investor know about it. Now first of all, is it my discontinued operation? That's what your Ind AS 105 principles you have to apply. Understood now here what they are trying to ask? So now 105 defines a group of assets as a disposal if they are going to sell as a single transaction. Is this Kanchenjunga is a disposal group? Yes, there is no doubt about it. Now you have to classify it as a held for sale when you primarily want to get money through sale rather than continuing use. What is your intention? Sale. Now you can, okay, now you say that asset or a disposal should be classified as held for sale. It must be available for immediate sale in its present condition. Was it available immediate sale for its available condition? But they added something extra now there. And it must be highly probable. So when do you say highly probable? There are 5 conditions: active program, actively marketing, reasonable price, and all those things. So in the given case, the draft agreement and correspondence with the investment bankers are not specific enough to fit the above point to prove that the criteria for, let's say, like you say there is one draft agreement, you wanted to sell it, but have you marketed it? Have you priced it properly? So additional information needed to confirm whether they have been actively marketed on 31st March 2022, because they didn't do it. Further, the organizational changes made shows that it is not available for immediate sale also. See, same question without this portion. They may ask you as an 105 question. That's why I'm telling you, this chapter is very easy actually. And 75% of the question is coming from accounting standard only. And one para will come from the conceptual framework. So even though you should be able to understand this accounting standard question, no. Now what is your conclusion? The shareholders authorized only, there is no evidence that they extended beyond November 22. Thus, you should not be classified as a held for sale. Instead, the results of the subsidiary should be reported as a continuing operations on 31st 12 and 30th. Now, in context of conceptual framework, now the conceptual framework says that users need information to assess the amount, timing, uncertainty. Highlighting the results of discontinued operations separately will help them to take better decisions. So if your intention is not to carry on the business just because you didn't advertise, does it become continuing operation? You see, you have got one subsidiary, you don't want to continue, you want to sell it. Only thing is you didn't activate actively, like suppose you have got one scooter, you are not using it, but you are not selling it also. What is the true status? It is actually abandoned. Followed, no? So when it is abandoned, you cannot say that that scooter is in active use, no? Who is telling this? Conceptual frame. Index says no, Baba. See, if you have abandoned it, you show it as an abandoned. Otherwise, it is a continued. I will assume to be active use. So your index says that Kanchenjunga is a continuing operations. Additional activities are there. You didn't actively participate it, market it. Additional activity, you could have showed it as a discontinued operation, but you didn't do that anything. Followed, no? So now, if a firm has made a decision to sell the subsidiary, subsidiary should be classified as a discontinued even if your criteria held for sale has not been met, because that will be more useful to the information to the investors. That's why there is a higher strictness in 105, which is to be conflict with the conceptual framework. Conceptual framework says that, look Baba, it's like same again your Ind AS 38. Ind AS 38 says don't recognize internal generated goodwill, internal generated intangible assets, because probability and all it is difficult. This says that even though low probabilities are there, please recognize. It will be in the disclosures. Which one? No, but we are not doing it, no, because first of all, first of all you tell me, when you prepare the financial statement in this case, is it shown as a discontinued operation or continuing? Now where is the question of disclosure? They may say it, but primarily it's a continuing operation, because as per 105, the criteria didn't fulfill. That's why 105 is very strict there. And this conceptual framework is much lenient. They say please disclose it. But since we started with one thing, that conceptual framework cannot override, nothing doing. Clear? Anyhow, understood, no, this question? The concept of capital. And the next thing is the concept of capital. It's called a concept of capital maintenance. There are two types of concepts called the financial concept and a physical concept. In financial concept, you look for invested money, purchasing power or net assets or equity, here operating capability. Now, when do you say that the capital has been maintained? An entity has maintained its capital. Capital means your investment, net assets. If it has that much capital at the end of the period, had it at the beginning of the period. How much was there your investment at the beginning of the year? 1 lakh. How much is there at the end of the year? 1 lakh. That means, yes, we say at least principal we have saved. That means you are not into loss. Opportunity cost is there. But you have maintained your capital. There is no erosion in the capital. They say that you have maintained your capital if you had, how much you had at the beginning, if that much is there at the end of the year, yes, you have maintained your capital. That means there is no growth, stagnant. Then what you did entire year? Sir, whatever I earned, I ate. You didn't save anything? No. That's why how much you had at the beginning is SB account balance. Same is there at the end of the year. Now, if you are withdrawing something for your enjoyment out of this base capital, that means it is a danger. See, you have something capital with you. That capital is needed all time, because that capital is going to earn something to you. So, from whatever new earnings you eat, you enjoy your life. Your capital is intact, because it is going to help you to earn next year. But if you start eating your capital, what is going to happen after some time? You will literally come on road now. That's why investor says, have you maintained your capital, or are your capital started to erode only? And when the capital start eroding, when you don't have earnings and to expense to eat food, you take from your capital. In 2021, this situation I faced, Corona time. I have to touch my capital. Otherwise, anyhow, we can manage with the earnings. But the touching capital, no, it's a very painful, Baba. Because your capital is getting eroded there. It's a painful thing. Unless you experience, you will not realize what it is. All this theoretically we study. But in practically we feel what they are trying to tell here. Now, there are two concepts of capital maintenance. One, under this called a financial capital maintenance, your profit is earned only the financial amount wise net assets has exceeded at the beginning. This is what we have learned from our childhood. This is maximum time, this is what investors look for. Your closing balance sheet rupee value is more than your closing balance sheet, opening balance sheet. Yes, that is a profit, excluding contributions and distributions to the owners. What is physical maintenance? See, physical maintenance doesn't go with the monetary value. It says that your profit is earned if your physical productive capacity or your operating capacity of the entity, like resources, funds needed to achieve that capacity at the end of the period exceeds what is there at the beginning of the period, regardless of any change in the monetary value of those assets. Like for example, you have got one house. That house is going to, you have given it on rent. Followed, no? Now you are getting that rent every year. And what is the capacity of that house? To earn rent of 10,000 rupees. If the land value is going to increase, will your capacity to earn rent from that is going to increase? Due to something, your land value has increased tremendously. Does it increase your rent earning capacity also? No, you got a capital appreciation because of that house, but your ability to generate cash flow in the form of rent is same only. So that is called a productive capacity. Like machine may get depreciated, but how much units it is producing? So this concept requires entity to maintain and reinvestment in the physical resources, which has got limited life. Like for example, see, my land value has increased, but if I have to continue to get say 5,000 rupees rent every month from that, what I need to do? I have to maintain that house. And if I don't maintain that house, one day that rent of the house will come down to 1,000 rupees because already it is about to fall, not painted, floor is gone. Who will come and pay me 5,000 rupees? So the physical thing doesn't look into the financial. It says, look, what is your asset? What is this earning capability? Is that much earning capability is maintained at the end of the year? Yes. If it is more than that, at the end of the year, if you are maintained, you have made a painting and all, and if you are able to earn 6,000 rupees rent per month, that means your profit is 1,000 rupees. 12,000 rupees is your profit for the year. Your accounting concept doesn't go with that. It may go with your other elements like, okay, all how much rent you paid, how much expenses collected, all deduction, this is your profit. That is your financial concept. Have you understood this? This is one way of looking. Actually, we go with always this. We have already studied this. Physical capital maintenance, generally we don't go with that. Again, which method to be selected, that depends upon needs of the users. What users will need? Users will always look for this. No? They don't look for your capacity. Sorry? Yeah, it's very important. It is very important. That's what some management has to consider both here, both the concepts. It is a real actually. This is a real profit. This is a theoretical profit. No, that you don't get. Real means actually we have earned operational profits. This is maybe your theoretical. Again, there is more deeper. I tried in internet one thing. So many articles came. There are so many concepts. Okay, let us. There is only one question. We'll focus on that. Now, capital maintenance adjustment. It says that the revaluation of the assets. Now, what you will say? You will bring one element, sir. My value of the land has increased. No, that's why they say that revaluation of assets, which gives decrease in the equity. Therefore, they should not be included in the income statement under the concept of capital maintenance. So, bring them in par. Otherwise, this comparison becomes meaningless. If you permit me, then I say I have made bumper profit during the year. How? From rent 60,000 rupees and from capital appreciation 5 lakh. But actually, did you sell that land? No. That's why they say that this revaluation reserve is not an adjustment. It's not a part of your profits. That's why, again, this is coming from a conceptual framework. That's why revaluation surplus will go to OCI. It is directly in the equity, no? That's what they said, they will be included directly in the equity, an adjustment as a revaluation surplus there. It will not be reflected in your profit. And that we may consider only here, not here. In physical maintenance, we will not consider that. That's why people who are interested in physical capital may like to choose a cost model. Anyhow, let us see one question. Okay, this is the Last question on this, probably concept of capital. Only one question. Now there is one example, okay, 11 to 13. A trader commenced a business on 1/1/2021 with 12,000 rupees. Chances are very low. Already we have seen what type of question they have been asking. They represent 6,000 units of certain product. That means you had got 6,000 rupees at a 2 per unit. This is your opening stock and this is your capital. You are a trader. During the year you sold 3 rupees per unit. That means all the units were sold. How much money you made? 18,000 rupees. And withdraw 6,000 rupees. What is compute the financial capital maintenance at the historical cost? Did you maintain your capital? Yes. How to know? No, for this we should know what is your closing capital. It is 6,000 units at 3. That means you have got 18,000 rupees bank balance. Out of this 6,000 you withdraw. So at the end of the year, your cash in hand is 12,000 rupees. What was your opening cash capital? 6,000 units at 12,000. So you introduced 12,000. At the end of the year also you have got 12,000. So your retained profit is nil. So next year again you buy 6,000 units at 2 rupees. And this process will continuously go on. This is the concept of financial capital maintenance. So somebody by looking at the P&L account, they understand that whatever profits earned by this person, he has consumed it. Now suppose that average price indices at the beginning and at the end of the year is 100 and 120. Now this is an inflation effect. Compute the financial capital maintenance under current purchasing power. Now I have to bring the effect of inflation here. So what you should do here, simply, what is your closing capital? Same, 6,000 into 3 minus 6,000, 12,000 rupees you have got. But next year, will you be able to buy again 6,000 at 2 rupees? No. That's why you restate your closing capital at the inflation prices. So as if I had restated my opening capital, it would have become 14,400. So what I see that 2,400 rupees is short. Actually my inflation I should have kept in mind before withdrawal. I should not have withdrew 6,000 rupees. Which one? 31st, whatever it is. Otherwise, yeah, we are assuming that this is withdrawn on 31st. So what I should have done, when the inflation plays a role in my business, I have to limit my withdrawals, keeping to maintain the capital. Otherwise, what happens? No? Next year my business starts to fall. I don't have sufficient resources to bring again to sell. That means that endless process doesn't work within, and this process continues. No, next year I'll be able to buy less, but 6,000 is my monthly consumption. So what I'm supposed to do? Cut down your cost? No. Otherwise, 4 to 5 years down the line, you see that this business is closed. Economics. The increased price per unit is 2.4 per unit. The negative retained profit indicates that you have failed to maintain the capital, and available 12,000 is not sufficient to buy again 6,000 units at 2.4 per unit. You can also do like this, 2 into 120 by 100. They have done different way, but this is your new inflated price, 2.4 at the end of the year. Had you would have withdrawn only 3,600, no? Yes, you would have maintained your profit. That means next year again you could have continued with your profits. The third scenario, suppose the price of the product at the end of the year is 2.5 per unit. In other words, the price index is 125. What is physical capital maintenance? Now this time no financial. No financial. How would you have seen the physical capital maintenance? Okay, now you say that closing stock is how much, or closing capital? 6,000 into 2.5, because you can sell at 2.5 now. You are not yet sold that. Minus 6,000, you have already withdrawn 9,000, and your current cost will be 6,000 into 2 into restated value. That means your retained profit is 6,000. That means entire 6. If I would have gone with the approach of physical maintenance, I would not have permitted you to withdraw 6,000 rupees because we are short of capital. The negative retained profit indicates that you have failed to maintain the capital. So if you would have sufficient fund, you could have withdrawn 6,000. So had the trader withdrawn nothing during the year, you would have left with 15,000 rupees, okay, which is sufficient to buy new products next year and continue. Yeah, these chances are very low that these questions may ask, they may ask you, but again, one example was there with number. You cannot predict, no, institute. Institute you cannot predict. They may ask you only one question out of this for 5 marks, not all the 3. They say, compute the financial capital maintenance as per historic cost. What you need to do? You have to just do this for 5 marks and say, you can repeat the process endless. Yet what you need to do is you have to find out the difference between opening capital and the closing capital and see whether the closing capital is less than or more. If it is more, then you say capital has been maintained. If it is less, your capital is not maintained, so we have to restrict the withdrawal. That's why companies that use so much focus on the dividend distribution, so much restrictions. Okay, so with this, we are done with this small chapter. Okay, we have seen some of the questions, theoretical question, and whatever questions have come today, except that one in the 38, all were direct questions. So